I'm Foreman, and this week I'm going to show you the UK stocks I bought, the top riser and faller in the portfolio. And if you find the video useful or moderately entertaining, please drop one of these, support the channel. According to Google Finance, the FTSE 100 is actually up 0.82%, the FTSE 250 is also up 0.14%, and the S&P 500 is actually down 0.12%. My portfolio has underperformed this week and actually dropped by 1.5%. However, if you look at the total value of the investments, it has actually increased. This is because I've moved some of my buffer cash, or you could say emergency fund, into the ISA. I'm using this as a temporary move as part of a bed and ISA strategy, and that would mean that I've made some bigger acquisitions than normal. You may argue that it's completely foolish and risky, but it's worth understanding that I have little to no risks that could currently affect my personal life. Sure, I'm furloughed, I could be made redundant, for example, but then I have little to no expenses. Most of my expenses, aside from a small portion of rent, are actually discretionary spend if I choose to even buy something. I'm typically not a consumer in that regard. Furthermore, you may have noticed that I said buffer cash, and I only plan to be without it for a few months. And yes, I do have a business emergency fund should the situation be bad, as if the computer breaks or any of my equipment like the camera, then I will have the capital available to repurchase that asset. You may also notice that I'm somewhat whispering. That's because I'm also recording at 3 AM in the morning, which is 8 hours prior to this upload, because I managed to sleep from 4 AM till 8 PM. And believe me, even though I've got this excess sleep, I still have wings on my eyes, and tired bags, so I can't win really unless I get a straight sleep pattern, and my body doesn't allow it. Anyway, I digress. The idea is that whilst I'm aiming to transfer money into my ISA so that I can maximize the amount of this year's ISA allowance, because I know I'm not going to reach it, so I may as well push as much as I can into it so that next year is a fresh slate, and if for some absurd reason I start earning more money, I could then take advantage of it. Once I have enough capital to replace the position, which I'll talk about later, I will then move the money from my general investment account and into my ISA, back into my buffer position, and then I'll have an emergency fund once more. But in the meantime, I'm not going to move this, as I want to continue holding as the volatility is really high. The top topics of the week start with NatWest, or the recently rebranded Royal Bank of Scotland. They've set aside £3.2 billion to cover bad loans, and they're also going to resume dividend payments to shareholders. In comparison to the likes of Barclays, another UK bank which I hope you know of, they've put away £4.8 billion for the case of bad loans. It may seem like a lot, especially when we look at their pre-tax loss this year of £351 million, but if we look at their balance sheet, they have well over £350 billion, although they do also have a considerable amount of debt that does not outweigh the cash. A name that many investors may remember is the likes of Neil Woodford, and recently the announcement of his return has certainly sparked some controversy. He had built a reputation over the last over a 26-year period for being a well-respected stock picker with the firm, Invesco. But then he had decided to create his own investment management, which was just Woodford Investment Management, and things started to go downhill from there, as I believe, but this is speculation, that he started to invest in more speculative stocks and they negatively impacted the performance of his fund, leading to investors selling out of his flagship fund and then basically administrators suspending it. A lot of people had lost money during this time period. And so the announcement of his return just 16 months after the collapse of his fund has certainly sparked quite some controversy with investors and is quite surprising. However, he only plans to raise money from professional investors only, but I'm curious, and assuming that you could invest in his new fund, would you choose to do so or not? The top risers in the portfolio start with Argo Blockchain gaining 44.62%. I believe that this was due to a continued increase in sentiment following the valuation re-rate and subsequent rise in Bitcoin, which has rallied very well in the last few months. I also believe that now shares in Argo Blockchain may cool off to consolidate over the next few weeks. There's still a lot of upside potential in the short to medium term. This is because they are still valued at a much lower multiple compared to their competitors listed in the Nasdaq by the likes of Riot Blockchain or Marathon, in which currently Argo Blockchain is much more efficient at mining Bitcoin and is also profitable, which is a thing that neither of those companies could say. However, one could argue that Argo Blockchain is listed in the UK and not the US like these two other stocks, and therefore, since there's a discrepancy between the UK and US markets, that the stocks in the UK markets aren't going to see that same valuation. Well, the advantage with Argo Blockchain is they're dual listed. They are actually listed, and with a $5 share price, they have the potential to be listed in the Nasdaq, which is the same as Riot and Mara. In the past, I had reason to believe that this was $2 per share, but upon further research, it does seem like you need $5 per share to be listed in the Nasdaq. But at this rate, at the moment, shares closed in ARBKF, the US listed variant, at $3.95, and so they really aren't far from this, and a push in just Bitcoin or continued valuation re-rates could certainly push this up and allow them to be listed in the Nasdaq. There's also potential in the future for the likes of joining the FTSE 100, as they are not an AIM investment, but rather listed in the FTSE main markets, which I believe they can go from the FTSE main markets to the FTSE all share and then into the FTSE 100 if they so desire, although the latter probably won't increase investment amount by too much. Then looking at the level of public hype and institutional investment behind Bitcoin, it gives me confidence that at least in the short to medium term that this trend will continue to go up. At that point, I would then look to taking profits. With this in mind, I've actually increased my position size with Argo Blockchain, acquiring a further 429 shares, meaning I hold 429 shares in my Freetrade ISA, and then in my Trading 212 general investment account, I hold 1,068 shares. If you'd like to sign up with my investment broker Freetrade, which I've been showing you the screenshots on the side of the screen, then feel free to click the link in the description down below and you can also get a free share. My average cost per share on the Trading 212 general investment account is 100.5 pence each. Then on the Freetrade portfolio, it's 242.65 pence each. So obviously there's a significantly higher average in my ISA. And yet, despite this huge increase in which my Trading 212 portfolio has an increase of 177% in total, I'm still buying shares and averaging up, which may seem like FOMO. I still believe that they could be valued at 3 to 4 times more, because if they get listed on the Nasdaq, then the likes of Marathon and Riot would certainly be more achievable in terms of valuation, and considering they're more efficient, it could certainly be more than possible. And especially if investment into Bitcoin continues, this would further fuel the investments into the miners also. The only other stock in my portfolio that didn't decrease this week is Ashtead Group, which continues to outperform pretty much all other investments in my portfolio. And whilst they've gained 1.73% this week, Ashtead Group is up 56.82% in total. In truth, I'm not entirely sure as to why Ashtead Group has had such a fantastic run-up, but I suspect it's actually a similar situation to Argo Blockchain, in which investor sentiment is boosting, investors are becoming more bullish and confident on the business due to their valuation. They were likely undervalued in the start, or at least in the pandemic crash, and this had meant that investors hadn't realised the value of it. But slowly and steadily, people are starting to notice, actually, this is a good price to buy this company, and that may have been why it's been increasing. At least when I bought, I believe shares of Ashtead Group were trading at a price to earnings multiple of around 18 to 19 times, and now they're rated at 28.9 times on a price to earnings ratio, although in part some of this would be caused due to the decrease in earnings that they slightly had. If anything, it has taught me that you shouldn't only buy high quality premium stocks, as whilst they are great companies most of the time, they're not necessarily the best for shareholder returns. I still believe in buying quality companies, don't get me wrong, but I do think you should also look towards, or I should personally look towards, companies that are quality but perhaps are valued at a lower multiple, and that in future I should look towards looking at another value investment opportunity and not be so heavily dependent on growth or dividends like I initially had been. The top fallers in the portfolio actually start with Team 17, which has seen a decrease of 9.42%, one of my highest weekly drops I've ever had in the portfolio. And I suspect that this is due to either investors taking profits, which is quite an easy thing to say about pretty much any share, but they have seen a significant run up in the last year, or the likes or lack of sentiment following the Codemasters sale to EA, which was another peer in their industry. And I think that would have lowered sentiment across the board, as the likes of Frontier Developments or FDev have also decreased this week. From what I can understand, or at least believe to understand, that these companies were trading at a significant premium to other industries, and therefore we may see a further decline to the likes of Team 17 and Frontier Developments. Although I did try and take advantage of this dip, and I did buy more shares in Team 17, buying 10 shares at the start of the week at around £8.15 per share and 16 shares on Friday. This brings my total position size to 106 shares, and at their current share price I'm very likely to be buying more next week, although I am still focused on Argo Blockchain, and that's because I do want to get the equity into that position, at least get an even amount of shares in my ISA, so then I can sell my general investment account holdings and then move it into the ISA. Ideally, I would love to be able to do it before the end of this tax year, but I think that's very unlikely, especially when considering the volatility could certainly pick up in this time frame. But it is very likely that I will continue to use my cash position outside of the investment ISA, which isn't too much, but enough to certainly bolster up the amount of stock acquisitions I make in the next week. The other top faller in the portfolio was one that I was very much wrong about, and this stock is Games Workshop, with shares decreasing by 5.49%. In the past, or 2 weeks ago I believe, I was inclined to believe that their run-up would increase and that they would continue rallying and consolidating on their shares. I was wrong, as they've retraced their growth in the last week and are back to square one, and still being down quite a significant amount in the last month. Regardless, this is the short term, and it really doesn't matter as a long-term investor, which I am, but I will try to take advantage of this opportunity should shares continue to decline, because I think they're a very high quality company and there's a lot of value in their management skills. And I'll be very interested in buying more and averaging up my investment, but obviously then that would contend with the likes of Team 17 and also Argo Blockchain. Shares of Halma had also dropped by 4.01%, and despite mentioning I would review this position in the next 9 to 12 months, I think that was quite foolish. This is because there's no point delaying the sell of shares of Halma if they may not appreciate in value in this time frame, or if I'm not as confident on them, for instance. My concern doesn't lie with the quality of the company, as they're fantastically managed and have a great history or a track record of acquiring companies, but my concern is more or less with their valuation, which obviously over the last few months I've been starting to look at more, with the likes of market caps. When I was thinking about London Stock Exchange, mind you, since selling that position at £93 per share, they're now sitting at around £98 per share, so I could have made a mistake there at least. Because how much are trading at a valuation or a price to earnings ratio of 52.9 times? To disclaim, I don't use price to earnings ratios, or in the past I didn't use price to earnings ratios in my thoughts towards buying a stock. But if a company is valued so highly based on their future expectations of performance, then perhaps that this is priced into the share price, and this means that over this next 5-year period, for example, their capital growth could be a lot less. Meaning that whilst you're holding a very high quality company, you may see limited shareholder returns despite fantastic performance, because this was already priced in and expected. And this ultimately comes from buying at a higher valuation. Whilst I don't doubt that Halma has resilience and certainly has a premium that will likely be kept, and keeping the share price at a similar level, continue growing consistently, and also continue with their massive track record of dividend growth going back over 40 years and at 5% each year, I feel that perhaps the lower level of risk in this investment does not fit with my investment strategy, which in truth has adapted over the last 6 months. This is because I have limited wealth, at which point I'm not going to try and preserve this amount and get moderate returns. What I would like to do is use my limited wealth and invest in riskier stocks, or maybe not riskier stocks, but invest in individual equities with more growth potential, so that hopefully I can bolster up my shareholder returns and rapidly generate wealth. Whereas I feel Halma would fit very well in a portfolio where you have a lot of wealth, you're looking to not only preserve that wealth because you don't want to lose it obviously, but also somewhat grow upon it whilst receiving dividend income. That sounds like a perfect opportunity in which Halma would be a sensible acquisition. I would love to hear your personal opinions on Halma as a stock and whether you think it fits with a higher risk portfolio that I certainly have. I do believe there are advantages to having a lower risk stock in times of high volatility, but I feel that with my risk tolerance, I don't really need that lower risk stock at the moment. If I did choose to sell this, for example, I would certainly add this back to my wish list and then look, and if it does drop below a certain valuation, I may look to re-entering a position. However, at the moment, my thoughts are mixed. I could use this capital, invest elsewhere, especially in the dip of Team 17 or Games Workshop, but at the same time I could continue holding, but so far in the time that I've held it since June or July, I've only had a 7% total return on this investment, which obviously going back on a yearly performance and the average returns of the S&P 500 or FTSE 100, that is great. I would like to get more. And I know that there's a few of you that watch the videos that are invested in Halma, and I really value your opinions because I definitely would like more thoughts into the matter, and it's very likely that I'm missing something critical with this stock. Boohoo has also dropped by 1.31%, but I actually have no comments on this position. I'm not concerned. I think that this is standard, and I do still believe in their long-term potential. And on this current point, I still hold 2,500 shares, and it's still the largest position in my portfolio. Surprisingly, I get asked this a lot, as I try to be completely transparent and reveal everything at all possible times, or as much as sustainable. And I get asked if I hold any other holdings. This is not the case. Every stock you can see on this video are all the stocks I hold in the stock market. That's everything, with the exception of my Nest pension, in which it's invested in the Sharia fund, and that's less than £200 of equity, which I wouldn't have in Nest if I could put it elsewhere, and I'll likely transfer that money using a SIP transfer to Vanguard and invest in a fund there once it's around £500, but that will take ages at my current earnings level. There's no share tip of the week today because I've not really got one, and if you're interested in my channel Q&A about my education and my thoughts on the US stock market and whether it crashes incoming, click the card at the top right of the video. Thank you for watching, have a great afternoon.